Hello and welcome to this special broadcast on Moneycontrol closing bell. I am Yatin Mota
and Santosh Nair.
Here is Santo as we call him. Obviously, the markets for the past 3-4 days have been consolidating. In fact, Santo, I wouldn't call this a consolidation now because I think the correction has been quite sharp for the last 2-3 sessions, and every day we are losing about 100-150 points on an average. And today also the Nifty ended close to the 21,500 mark, below that crucial support zone. Now, if you talk about the markets, clearly profit taking is seen in the large caps. Some FI selling was also seen in the large caps. When it comes to the mid cap markets, obviously things were better. In fact, the advance decline ratio of the market was nearly 1:1, indicating that the strength in the mid cap is more or less stronger than the large caps. People have been advocating that stay in large cap because there is a froth in mid caps, but still there is no sign of correction in the mid cap stocks. Selling obviously seen in IT and metal stocks. Obviously the next week would be marked with the start of the earnings season, with Infosys and TCS coming out with the quarterly numbers, and ahead of the quarterly numbers we have TCS and Infosys both looking weak in trade, and so is the case with metal stocks, with steel stocks witnessing some profit taking. However, yesterday's losers were today's gainers. PSU banks and real estate stocks were doing well in trade. So to sum up the markets, selling in the large caps and some bit of momentum in the mid caps, to be very stock specific.
Well, Yatin, just wanted to take you on that part on IT stocks. After the Fed signaled that it was likely to cut rates, overall IT stocks did see a brief rally, and one thought that the general view now would be that the outlook for IT stocks is not as bad as it seemed till a few months back, but now that again seems to have dramatically changed. Now, when you have the possibility of a soft landing in the US increasing, ideally one would think that IT stocks would be the safe bet, given that the valuations had become reasonable, but that is not happening. So what is the big worry here, Yatin? What do you think is market really worried about?
I think December was a month of solid gains, Santo, and despite the fact that FI selling flows continued, we had some bit of rally in the month of December. In fact, double-digit gain coming in on most of the benchmark indices and sectoral indices as well. And I think the start of January, the volumes were quite low, but today on good volumes, the market witnessed some profit taking. So yes, in tandem with the global IT stocks or global indices, we are also witnessing some profit taking. But clearly, market men are hopeful that once the earnings season start, there could be a good consolidation in the markets with good numbers, being rewarded, and weak numbers being equally punished. So we'll wait for the result season to get a clear picture. But as of now, the auto data was weak. We had the quarterly updates coming in for a lot of financial services companies, which were mixed, not very strong, but mixed. Despite the fact that December quarter is usually a good festive quarter. Avenue Supermarts, Santo, their quarterly updates were also quite weak. So I think it's a mixed reaction, wherein quarterly updates as well as a few of these earnings are impacting the stocks.
Well, I think for a change, Yatin is sounding a bit cautious. Otherwise, he's the one who always sounds quite optimistic. But looking at it another way, Yatin, you're saying that yes, the market has been falling, but if it's falling on huge volume, it also means that there's a lot of buying.
Yes.
That's another.
Yeah.
Also, you've seen what, barely 2% correction from the peak.
Yes,
so
yes.
I think it's too early to be pessimistic. Yatin.
Too early to be pessimistic, but Santo, one day of profit taking, another day of profit taking, third day can't be profit taking. It has to be selling, because every day if you tell viewers it's profit taking, one fine day when the markets fall 300-400 points, then it's something serious that you need to acknowledge.
And the other interesting thing what we are noticing is everyone is saying, all the experts who come on our channels are saying that this is the time to be buying large caps, because large caps are cheap and mid and small caps are expensive. But we are seeing the trend in fact accelerating. People are buying more of mid caps and the cheap is getting even cheaper.
Absolutely.
Well, and with that, let's quickly move on to the stocks on our watch list this afternoon, starting with M&M Financial Services. The company gave its quarterly update. Again, numbers just about okay, no great shakes out there. On expected lines, you saw the stock hold steady in trade today. Most brokerages continue to be cautious on the stock. Nomura has a reduced rating on the stock with a price target of 230 rupees, and it's flagged the fact that the disbursement growth has moderated although the business asset growth has been strong. The good part is that collection efficiency remains steady at around 98%. And on the positive side, again, you have a slight decline in its stage 3 assets, and at the same time its stage 2 assets have remained steady. So pretty much a mixed bag of numbers there, as Yatin was mentioning a short while back. According to Jefferies, at 1.8 times estimated FY25 core book value, the risk reward seems to be reasonable at this stage. Jefferies has an equal weight as a hold rating on the stock with a price target of 285 rupees. And Morgan Stanley, which has been one of the big bulls of the stock, is also sounding a bit cautious. It has an equal weight rating on the stock with a price target of 285 rupees. It has said that if disbursements do not pick up, there could be risks to its AUM forecast.
Absolutely, and M&M Financial is one of those companies which has underperformed severely, but yes, has been able to move recently. Talking about financials, another stock in focus is PNB Housing, because Morgan Stanley today has come out with the overweight call target of 970. Now there was a India rating credit upgrade for the company, and the NCD rating is now at AAA plus versus AA. The outlook is stable. Now what this rating upgrade means is that PNB Housing would be able to access the funds at a bigger scale, and more importantly at a better cost of finance. In fact, Morgan Stanley believes that the rating upgrade could help improve both availability and cost of borrowing, and it could help PNB Housing get better margins on its loan products, and hence they do believe that this event for PNB Housing is quite strong and big, and probably from here on we could see some improvement in profitability, and hence, as I mentioned earlier, they are overweight on the stock with a target of 970.
Well, a spectacular run PNB Housing Finance has had this year. So far it has risen almost 2.5x, and that in turn could be prompting a lot of people to take some money off the table for the time being. Well, the next stock on my watch list is Avenue Supermarts. The company came out with its third quarter business update. Looking at the reaction in the stock price, clearly it does appear that the market seems to be disappointed, and the biggest concern at this point clearly is the pace of store addition, which both Morgan Stanley has as well as HSBC have pointed out that it's quite tepid and it needs to pick up. According to Morgan Stanley, the operational metrics have improved further. However, the pace of store addition needs to pick up, and Avenue Supermart so far this year has added 17 stores in all. Its overall number of stores currently stands at 341, and which according to HSBC is not good enough. HSBC has pointed out that a business model is formidable. However, the company needs an assortment overall and network strategy reset. HSBC is bullish on the stock. It has a price target of 4,600 rupees, whereas Morgan Stanley has an overweight rating on the stock with a price target of 4,471 rupees. Well, with Avenue Supermarts, Yatin, I think the bigger concern right now seems to be valuations. Valuation,
and I think their store addition also, Santo, has not been that aggressive. They have been talking about adding 40-50 stores per annum, but they haven't been able to really get more stores in their forte, because markets really looks for that store addition in order to really boost the earnings or upgrade the ratings. But the model of DMart is to own the real estate and also to have a real estate in a pocket wherein they are quite satisfied with the area, locality, population, so on and so forth. I think their matrix is so stringent that they haven't been able to close deals on the real estate front, and probably that is impacting the overall store addition as well as the growth matrix for Avenue Supermart. And obviously valuation always has been a concern that the stock is always expensive, but I think the premium the management commands and the kind of quality of growth of earnings that DMart has been able to give really makes investors hold these kind of stocks.
Well, yeah, last
on radar is the entire industrials capital goods space. Now Jefferies is bullish on L&T, Siemens, Thermax and stocks like KEI because they believe that despite the fact that 2023 was a great year for capital goods order book, 2024 could slightly slow in terms of government capex and private capex. However, the silver lining here could be the power sector, because the power sector is witnessing some big announcements, some big projects which would clearly boost order books for these industrial as well as capital good companies. To cut the long story short, that the upcoming budget could signal some capex slowdown. However, the indigenization focus of PSU's private sector and power sector capex should be able to help the domestic companies. So Make in India theme and the indigenization scheme should be able to help all of these capital good companies, and L&T Siemens clearly are the top picks for Jefferies.
Clearly, I mean, who would have thought that not only is the power sector up and running and people are chasing it like anything, at the same time so many other sectors which were dependent on power too are having a good run. So a dramatic reversal of fortunes there, power stocks clearly leading from the front. Well, and on that note, it's a wrap on this edition of Closing Bell. Thank you for watching.
And stay tuned to Moneycontrol for all your business news and updates. We'll meet you again tomorrow at the same time. Thanks for tuning in.